What's going on, everyone? And welcome to another episode of my weekly review. This is the second week now where I have not been trading live. Been taking 2 weeks, as you all know, to implement my ICT strategy. The first week, last week, was a lot of studying, a lot of trying to piece the puzzle together of what is my new trading plan. And that went quite well. If you haven't checked out the sort of three key concepts video that I released as part of my weekly review last week, be sure to do so. This week, I was actively paper trading the market. I think before going back into live trading, I wanted to get a feel of how I, actually execute on the strategy. Even if it isn't live, I think paper trading has given me a lot of perspective. It's been a busy week, five trades taken this week, and a couple missed, I think two or three. So yeah, I think initially, or at least my initial sort of some initial feedback I'm getting is that there's a lot of opportunity with the strategy. I think because there's so many concepts, so many confluences to look for. It's easy to find setups. And a key focus for me this week was building my narrative or sort of developing a bias and trying to be on the right side of that bias. And so, yeah, in terms of sequence of results, not great. No wins, one break even, four losses. Two of those losses, half of the risk had been taken off the table, so they weren't at full exposure. And then two of the losses were full 1R positions. So it was a total of minus 3R for the week, if I'm not mistaken. Yeah, because that's two full exposure losses and then two half risk losses, which equate to one. So 2 plus 1 is -3. And so for this week's weekly review, what I just want to do is take you through those five positions and just run through in terms of my plan what was the bias as per my checklist. Did it meet the plan? And then maybe in hindsight, would I take these trades again? Is there something I missed? I think I'm just trying to uncover if as much I think insights as possible from just running through these trades, because I'm still in testing. I'm still in this R&D phase, and I'm not focusing too much on the sequence of results right now because I'm still very new to implementing the strategy. But I think there's a lot of data that's come out of this week that will help inform me in terms of how to correct a few things going forward. So yeah, I think without wasting any more time, let's jump into the first pair, which is EURUSD. Like I said, two positions taken on here, both long positions. And yeah, starting on the daily, I think early in the week, Monday's close, we closed above this high. And yeah, thing about daily, the Euro USD is my bias actually shifted over the week. Initially, I had a short bias, but then once we did get this close above here, it started to shift to more bullish as we established these external range liquidity points. And so I was looking for the pullback to a key level within this range to continue higher. Dropping down to the 4 hour, you can see the 4 hour also had its own external range liquidity just based on these 2 points here. This was our low, and then that was our high. And so I'd marked out a fair value gap in this area that was waiting for price to pull back into to then take to the upside. We did pull back into there. What I like to do sometimes is if there's a very large key level on the 4 hour, I'll drop down to the 1 hour, the 15 minutes, and see if I can refine that. Fortunately, on the 1 hour, I could. And so refine that fair value gap, But within that as well, there was a confluent breaker block, which is the zone marked out here, as well as then obviously this occurred at a breakout point, which makes this fair value gap a break and structure gap, which is much higher probability sort of key level. So yeah, we had a lot of confluences, sort of indicating that this area was going to get a good reaction from price in terms of heading higher. But something that was almost supporting that initial bearish bias that I had at the beginning of the week was this market maker model that we formed here. And if you're in the live, so market maker models are essentially price being engineered in a specific way towards a key level, and the sequence in which price plays out leading up to that level and then also away from that level helps us identify entries and time entries also. That's my very basic understanding of market maker models at this point. They are, in my opinion, quite an advanced sort of concept. If not advanced, just something I don't really understand at the moment now. But yeah, as time goes on, something I think will be quite key to successfully implementing the strategy. And so we had this market maker model, first reversal, first consolidation, I mean, push higher, second consolidation, push higher into that key level. I just wasn't convinced about this reversal here because it was clear on the minute 15 as opposed to the 1 hour, in which the previous corrections were quite clear. So I did not take that as a reversal, which, we'll see in a little bit actually was. And this was that second extended but high probability reversal to the downside, making this a pretty clean market maker model that eventually played out. But yeah, when we failed to get a bit of a distinct reversal in this area, I saw this push down here more as a correction into this high grade area. And then so yeah, from a checklist perspective, high time frame checklist for my entry criteria, of which I need two before looking at my low time frame execution. My high time frame bias aligned with my low time frame in that I had daily external or internal range to external range liquidity. So we're trading from a daily or high time frame key level to a a high time frame high. And then we also had a manipulation beyond time-based liquidity, or a time-based liquidity sweep. And that came when we initially came down into the larger sort of fair value gap and we rejected, and then came down and swept that as we then mitigated the breaker block and that area of overlap. That was then the second sort of criteria that was met. On top of then all, the fair value gap, the breaker block, the break and structure gap confluence. On top of all of that, we had a minimum of two criteria that was met from a higher time frame to be able to drop down to those lower time frames, the 1 minute, 5 minutes, arguably even 15 minutes, to start looking for an entry. And so, just quickly showing you the entry on here. So then dropping down to the minute 15, there was this 1 hour retrace, and then we started to get a correction. And then on the 1 minute, I took an entry on the inverted fair value gap. But right now, it's more about building that narrative, so I won't drop down to the 1 minute as yet. I think just also for the sake of time, yeah, let's just keep it to a minute 15 minimum. And then this trade was the break-even position. There was just a slight deviation in terms of my management that led this to stop me out before going higher, which was price had not yet formed a correction and then a push higher before I moved to break even, which is something I changed after this trade. Initially, it was once we got to 2R, then I moved to break even at least 2R or obviously new structure. But after rewatching some of the strategy videos, that's not a criteria. It's more following when that new structure is formed to avoid things like this, where new structure hasn't formed and I'm at break even, and then it just stops you out before heading higher. So this would have been clean if it was managed slightly differently, and it eventually played out for about no, this wasn't -6. I think it was -2 or something like that, somewhere there. But yeah, it was a clean like 2.5R position. And look, we headed higher. We got to TP. I wasn't in the position, but then we eventually came back down again into this area. And then after we shifted this minute 15 structure on the pullback, and I think it was there was a European Central Bank, I think, had a interest rate cut that morning on the Thursday. So after we broke that, what's going on here? Broke that structure to the upside impulsively. Then I established this new structure with the fair value gap that had formed here. New fair value gap there. Price pulled back into that on the 1 minute as well. I took the inverted, no, it was actually a SMT divergence entry. So similar high time frame sort of criteria that was met because we were in the same area, just a different type of entry. But my bias was still, I'd maintained that long bias at the time. And I think in hindsight, or beyond that point at least, this kind of started to show that this was more of an extended correction than a reversal to push higher, because if this was a strong area that was being rejected, then we would have displaced with a lot of momentum to the upside. But there was a lack of momentum, lack of displacement, which was then followed by obviously Friday, NFP. We just saw that hit low to the downside. So yeah, one break even here, one half risk position because the second position was taken out at half risk. So took a total loss of minus 0.5 R on EURUSD. Pound JPY. This one was not as exciting from a high time frame perspective. We were just at this daily high. And then price obviously failing to displace with good momentum above there. Just started trickling slightly lower, and then dropping down to the 4 hour. We had started to form structure on the way down. We had clearly marked external range liquidity points, low, lower high, higher low. And then large 4 hour fair value gap as our internal range liquidity that price had pulled back up into, that I was looking for a reversal from. And so also had this order block that was way up here. But I always knew that we could reverse from the fair value gap and not get down there, not get up there, I mean. So dropping down to the minute 15, you guys can see we started shifting this to the downside when we broke that low and then broke that second low. And I was pretty convinced that we were heading lower from this point and not coming all the way here. And yeah, this pulled back into this 15-minute internal range liquidity, fair value gap there. Admittedly, I'd marked out all of them and they were just getting ran through. So that was kind of like the last line of defense. On the low time frame, it was a market structure shift entry on the 1 minute time frame. Look, in hindsight, I think this did kind of play out as a more of a manipulation to the downside. before that expansion to the upside, especially with this being the previous daily low, this pullback or this run of the low occurring in that first portion of the day, especially after the true open, which we normally get that engineered move before price displaces in the right direction. But in hindsight, just looking at this whole structure and how it developed and the area we were in on the high time frame, uh, I I was more than happy to take this trade. I think it was one of those that really could have gone either way. If it carried on going lower, I would have been kicking myself that I didn't take the signs from the market that we were hitting lower. So I had the plan, followed the plan. It just didn't work out, and I think this was just one of those. So this took me out for full risk, 1R. So yeah, in total we are at 3 trades and minus 1.5R down. And then quickly on USDZAR, daily perspective, this one was interesting, but we got the inversion of this fair value gap to the upside. I like this because we were trading obviously within this daily range from this high here down to this low, and this was really the only clear area of internal range liquidity that we could have pulled back from. But price was heading, forming very clean higher highs, higher lows, higher highs. Market maker model was forming here. I think a lot of political uncertainty with the rand at the moment, following the national election results and ongoing coalition discussions. There's the investor market or investor sentiment is there's not a lot of confidence, I think, at the moment in this political stability, I think, in the short term. And so this is taking a beating off the back of that. And so that daily clear with the inversion. The 1 hour was super clean on the day because we had literally corrected throughout the whole of Asian session. And so I was anticipating that run of that low in early London into this 4 hour fair value gap, which was quite clean. Obviously, you can see our 4 hour range from this low to the high, and then this was the one-sided fair value gap as that internal sort of range liquidity between that as a point of interest for price to push higher from. And so we got the run into there. We respected it. Like I said, market out on the 4 hour, got that high time frame level, but dropped down into the lower time frame. If there's an opportunity to refine it, I do, and there was. And so we got the sweep below the 1 hour structure, but then also got the 15-minute sweep within this fair value gap, which was quite clean because then the first entry came from there. It was an inversion of the fair value gap on the 1 minute. It started trading up quite nicely, moved stops to half risk, and then got stopped out there. But then price still respected the structure. I think minute 15, you can see there was clear displacement to the upside after a second manipulation. On the 4 hour, you can see this fair value gap being respected. And so, yeah, I found another entry very late. Arguably, I was revenge trading here. And yeah, by taking this entry late, I think for the sake of data collection, I took it, but it's not a trade I would take again. And yeah, this was a full risk loss, which bring me to a total of -3R for the week.